approximately 11 a.m. in Honolulu, 4 o'clock in New York City on Wednesday, the 8th day of February 2012, and this is the daily report for gold and silver. We have both gold and silver trading off on the day, well off of the lows, but still a fairly sizable correction or sell-off. Gold currently down about $11, just shy of that, at $17.34, $17.33 bid-ask spread. Silver off about 18 cents, and as you can see, it is currently trading back below $34 at $33.95, just shy of that. First chart that I do want to look at today is going to be our Henkin chart, but I'm going to start with a little bit of a short-term intraday chart. This is a 480-minute chart, and as you can see, when we take it down to 480 minutes, we get some real detail in the Henkin charts, and you can also see that over these last two time periods we have gone and turned red. When we look at our dailies, of course, are lagging behind. They're still green. The interesting thing when we take a look at this latest market move, in other words, this is the 1760 that we hit, came back down, tested right around 1720, 1733. We have a couple of critical areas that I think are worth noting. And to do that, of course, we'll need to look at a simple Fibonacci retracement. Let me put that up for us. Now, traders, all I have done is added a very simple Fibonacci sequence. And the sequence that I'm looking at is from these recent lows to the top of the last rally, 1760. And you know that over the last few days, I've been speaking about this 1706 area as a pretty critical area. In other words, when the market came down and tested these lows, the fact that it found support in this area, I believe, bodes well for this particular correction having subsided. Now, the market moves back up, but now we're back down in terms of a corrective stance. My sentiment is, overall, I remain as bullish as I did yesterday. Market is simply trading within a range, but we do want to watch and see how it reacts in these areas. Traders, the two charts that we are looking at are both gold spot. One is a 720-minute intraday chart, so you're getting 2 bars or candles per 24-hour period. 440 minutes equals a day. 360 below it, we have our current count. And what I believe to be a likely scenario, if in fact we maintain this bullish stance, which I have every reason to believe we will, is in terms of forecasting with wave 1 fully in place. All I have done is made a model, and the model that I'm creating is basically saying if wave 1 and wave 5 are equal, then the conclusion of this top or fifth wave, this is a subwave, mind you, is going to take us to about the 1850 area. That still seems very realistic to me in terms of straightforward forecasting. Wave 5 can be truncated. It can be the shortest of all the waves. It can also be the longest. It doesn't have a fixed rule like the third wave, which cannot be the smallest. However, if we take a look, historically speaking, these fifth waves have absolutely been the boldest of the moves that we see within the gold market. And I have no reason to believe that that is about to change. So when we take a look at the potential or what we're looking at, I absolutely am still under the belief that when we take a look, this of course is our major count, our intermediate count, and then our minor count just below that. So we're concentrating on the minor count, and the minor count that we're looking at is going to be the 5 waves that compose an intermediate one. So that 1, 2, 3, 4, and 5 still seems to be a model that is plausible and could easily play out within the marketplace. Now, as of recent, silver has been trading rather sideways. In other words, gold has been making consistent moves higher or lower. It has not been base forming in quite some time, but the same cannot be said for silver. And as you can see, this band of support and resistance, this active band in which we have support and resistance, has remained pretty much unbroken. The real next level that we have to overcome, as we've talked about, is to move above 35.35, and that's taking out these interim highs that we saw back in November of last year. My sentiment again is that we are going to see silver follow gold, and I do remain bullish on both those markets. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.